Good morning, everyone. It's Ben Buckner with Ag Resource Company in Chicago. It's Monday, July 14th. Dan Bossy is out today at Farm Foundation meetings along the West Coast. We've got markets that have jumped from overnight lows. It was pretty easy to make those calls last night, given weather, seasonal trends, the looming trade war that could resume on August 1st. But we have found support at overnight lows, and so we can't identify one specific thing that explains the jump, but market's not terribly expensively priced, and at some point I think the burden does shift a bit to the bears. We just think that that burden stays intact based on central U.S. weather, Chinese weather, maybe even to some extent kind of a replenishing of soil moisture in some pretty key wheat areas of Argentina and Australia. And to that end, we can only really identify Western Europe, maybe parts of Russia, as having weather issues today. And the Russian wheat yields have been a little disappointing. We'll kind of see how that evolves. But otherwise, we do think rallies will be challenged, again, just based on Mother Nature's performance in most places, including the U.S. plains and Midwest. And I think that to explain to some extent the recovery or the lack of weakness this morning in ag markets is the financial markets, not really impressed by the threat of tariffs or the tariff letter sent out last week. And so I think we're kind of in wait and see mode. How many deals can get done between now and August 1st? Who's willing to play ball? We do think China is going to be an issue, but maybe we do get a lot of Southeast Asia, maybe fine-tune Europe, United Kingdom. We'll get some details out of this, but I think that does explain the markets this morning. There's really nothing that's terribly weak, and so again, markets unimpressed by so far the new threat of reciprocal blanket, pretty elevated tariffs starting August 1st. So the Dow's down about 100 points. A lot lower than people thought. We thought weakness would be a little more pronounced in the financial markets, but it's not. And so that's where we are today. Otherwise, we kind of look at weather, and it looks very, very good. Even over the weekend, a lot of dry areas of western and northern Illinois got a pretty good soaker. And so on the left, you see kind of official accumulated rainfall on Saturday and Sunday, and you can see an inch to 2 inches in some pretty key areas of the central Midwest, again, including western Illinois, northern Illinois, where rain is most welcomed. On the right, you see the soil moisture ranking percentiles, and we're kind of pushing significant moisture deficits farther east and north in Illinois to the point where it's now kind of the Chicago metro area. And I think this colliding with a lot of forecasts that are in pretty good agreement that suggests we probably don't see a lot of problems, further easing of dryness in places like Illinois and Indiana, and that's just pretty critical. So will all but Chicago be well watered on July 25th, I think is the question. We do have some looming heat, I think. The models are in very, very good agreement, so we do have a lot of confidence and maybe even the details of the next 10 to 14 days. But on the left, you've got the 1 to 5 day temperature anomaly forecast, nearly ideal. Lows in the 60s in a lot of places, highs no higher than 82, 85, greenhouse growing conditions. On the right, you do kind of see this ridge show up across the southern plains, the sort of Delta Gulf region. That will fan some heat into Oklahoma, Kansas, Missouri, maybe some high temperatures in the low 100s there. But I think this will be accompanied by kind of an abundance of moisture. So we've got on the left NOAA's updated 5-day rainfall outlay. And so if this is proven correct, another inch in places like Iowa, Illinois, even northwestern Missouri. On the right, you've got the European model 6 to 10 day forecast. And so you kind of see this summer climate setup becoming rooted and structural in nature. So you do have pretty significant heat and dryness west of the Rocky Mountains, certainly, and probably in Texas, but you've got these kind of ridge riding storms, lack of sustained heat where we grow most corn, soybeans, and spring wheat. So again, I think the theme to us for the next 2 weeks, probably into the end of corn pollination, is something like warm but very wet weather pattern. So it does look pretty good. And if we do see, corn crop ratings still at or above 70% in the next 2 weeks, that still kind of underscores this is a pretty special corn crop being produced. But like we talked about last week, it's not just the corn supply and demand, soybean supply and demand. You're going to see crop conditions, weather forecasts kind of all over the ag media landscape today. But it's everything else that I think gives us, some still risk to the downside. We're starting to see an acceleration in the safrinha corn harvest in northern Brazil, where IMEA pegged Mato Grosso's official safrinha corn harvest at about 58% complete as of last Friday. According to IMEA's numbers, that reflects about 31 million tons. So just in the last couple of days, Mato Grosso has harvested enough corn that crosses the threshold of the domestic market's needs. So we're going to start to pay close attention to the Brazilian FOB market and what price of corn the Brazilian export is willing to offer into the world market, given the domestic market should be satisfied, at least in the next 10 days, probably nationwide. And you kind of see the at least the cash corn index that is updated daily starting to shed premium a little more intensely. So we're down to new seasonal lows at $4.80 a bushel when we look at the Brazilian daily cash corn index. And so we're probably looking at a market like 2023 that was pretty large in terms of crop size. Delayed planting, delayed harvesting. You didn't have a lasting bottom in the Brazilian corn market until really the first part of September. So probably that provides us a template for what we see this year. So again, I think Brazil does act as a weight, provides competition, and I think those FOB offers will get a little more competitive in the next couple of weeks. And then it's kind of the fringe of the U.S. feed market. So we talked, last week about hard red wheat stocks being pretty abundant, in USDA in its July WASDE validated some of that with new crop hard red wheat stocks projected at about 430 million bushels. That's still the highest in many years. That market's looking for demand. And weak sorghum basis in the Central Plains is not a new phenomenon, but we do take a look at the snapshot there, and it's still about $1.15 below the Chicago Board of Trade corn market. So as of right now, that's a $2.85 cash sorghum price in Hays, Kansas specifically. And when we look around at other major sorghum markets, it's pretty common to see bids 30 to 60 to 80 cents below the Board of Trade corn market. So that market also looking for an outlet. And again, if we don't have a Chinese deal, I don't think the USDA's pretty optimistic sorghum export forecast will be realized. So we'll be building feedstocks. So all that lingers in the background still today. And so I think that as we get recoveries, short covering, again, we'll debate the nuance of spring row crop yields. Just be mindful that we still are probably dealing with, building stockpiles of grain in the U.S. and in the world. So you're going to be fine tuning a lot of this risk. Again, pay attention to what's coming from us, by state corn, soybean estimates, looking at trends by state. What are we actually looking at in terms of crop size? That's going to be the big news this week and next week. So $1 gets you in for 30 days. Take a look at that research. And as always, all the best in the markets today. And we'll talk to you tomorrow. Bye-bye.